the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
African fiat currencies have, barring a few notable exceptions, been steamrolled in the last 2 years. For proof of that, you need look no further than the rand, down more than a quarter against the US dollar over 2 years. And interesting to note that in Bitcoin terms, the rand depreciated 24% over the last 2 years. And that's about the same rate of depreciation of the rand against the dollar. Or expressed another way, the price of Bitcoin has jumped 24% in the last 2 years in rand terms. But when it comes to other African currencies, the picture is not much better. The Nigerian naira and the Ghanaian cedi are down nearly half against the US dollar in 2 years, and the Kenyan shilling lost 26% over that same period against the dollar. It was a far better story for the Ugandan and Tanzanian shillings, which lost a more respectable 7% against the dollar over the same 2 years. None of this has gone unnoticed in these countries and explains the extraordinary rise of stablecoins as a quick and easy way for citizens in Africa to get their hands on US dollar-backed stablecoins. Getting access to fiat dollars is less easy as central banks maintain a tight grip on these precious dollars. Today, we're looking at the rise of stablecoins in Africa. And to help us understand this better, we're joined by John Ovadia, founder and CEO of OVEX, which offers a range of stablecoin pairs to its clients across Africa and the Middle East. Hi, John. Welcome back. We haven't spoken to you for a while, but can you give us a brief explanation why the Nigerian naira and the Ghanaian cedi lost nearly half of their value in the last 2 years? I mean, that's a huge blow to the people living in those countries.
Hi, Kieran. It's great to be back. Yeah, African currencies have really had a tough time against the dollar in not just the last few years, but if you look at pretty much any African currency against the dollar over the last 10 years, every single one is essentially up and to the right against the dollar. Just a steady decline, which is really, really tough for these local countries. The last 2 years, there's been a massive dollar shortage globally. It hasn't just been Africa. Nigeria and Ghana were heavily hit. Nigeria, for its own reasons, they had an election, they had a new government. The previous central bank governor was actually arrested, and the new central bank governor is making a lot of very big changes. Nigeria, for example, used to be pegged at about 412 to the dollar, the official rate, even though there was no liquidity at that. The new governor has floated that rate, so now it's floating around somewhere around 900, the official rate, where it was at 400, so it's massive decline, but I think a very good step for the country. Additionally, they just removed exchange controls in Nigeria, which is a very interesting turn of events. And they also introduced a cryptocurrency license, which means that they're steering more towards joining the global financial system rather than trying to control their currency. So Nigeria is going through a lot of fundamental changes, and we're yet to see how that's going to work out for them. But that's the main reason for the massive devaluation there. Ghana, another story, they defaulted pretty much on their debt. And yeah, that caused a massive flight away from the cedi. Although it seems to have strengthened a bit recently. And yeah, pretty much those are the big events in those two countries. It's really the people locally are suffering quite significantly there.
Yeah, and Nigeria, just in the last week, you mentioned there's been this change of governor at the central bank. They have just redefined how they calculate this exchange rate. So you always had a parallel market for the naira, and this new way that they calculated, the naira actually lost 30% in a week, which brings it closer towards the parallel market or the black market rate. The question is, though, if they have done this, is there enough liquidity, if they've removed exchange controls, is there enough liquidity to satisfy the demand within the country?
Yeah, Nigeria should. I mean, you see, they got a very strong oil production, which is obviously priced in dollars and should provide a lot of dollars. I think historically it's been corruption that's led to the shortage of dollars and the exchange control or foreign exchange problems in Nigeria. Countries that have large exports and large natural resources generally are able to obtain dollars enough to support their currency, whereas Nigeria, they weren't able to, but I do think that was the result of corruption. They were pegging it to 410, 412, and no one could ever buy dollars at 412 except for very, very few people who were buying it at 412 through the exchange, through the central bank and selling on the black market for double almost immediately. I mean, that's the best arbitrage you could possibly have. And I think these were reserved only for very, very few elites in Nigeria. And I really think that's why they had that system. You saw when the new president came in, the old central bank governor was actually arrested and he's now sitting in jail. So I'm sure there was some serious corruption happening there. I do think a free market won't be a problem. I think it'll be very good for Nigeria in general. It does need to find its feet. It needs to find what price it will settle at. We're not sure what that'll be. Probably won't be where it is now. Probably got some more devaluation in store, so people aren't used to a free-floating Nigerian currency. So we need to just see what happens. But I do think generally over the long term, it's going to be a positive for Nigeria.
Now, OVIX has expanded into several African countries, and I guess that's in part because there's demand for these stable coins, particularly US dollar-backed stable coins like Tether, USDC, and DAI. DAI spelled D-A-I. Are residents in Nigeria and Ghana able to buy these stable coins without breaking local laws?
Yeah, so they can. So both Nigeria and Ghana crypto is fully, I guess, unregulated. It's not illegal or banned in either market. Nigeria did have a central bank ban on financial institutions, mainly banks, on banks essentially servicing cryptocurrency companies. So that's what Nigeria did. They didn't ban cryptocurrency, and cryptocurrency companies were allowed to operate and people were allowed to buy and sell cryptocurrencies, but the banks were not allowed to open up a bank for cryptocurrencies. Luno had a bank account frozen there with a few $100 million. But it wasn't frozen or confiscated or anything. It was just the banks were told to essentially de-risk, offboard these large crypto institutions. So in Nigeria, that was the case. They've since lifted the ban, and like I said earlier this year, they actually released a cryptocurrency exchange license, which is very, very exciting in Nigeria. So Nigeria is definitely going in the right direction. Ghana, it's never been illegal. Neither has there been a ban of any sort in Ghana. Although the central bank and the banks aren't super excited about crypto, or haven't been in the past, but it's completely legal to trade crypto in those markets.
Now, I guess South Africans should also be taking a hard look at the state of the rand. I mean, when you think about it, if the rand has dropped by a quarter against the dollar in the last 2 years, what does that mean for inflation and what does that mean for the value of investments? It does make it harder to save, to invest, and to stay ahead of inflation. Are South Africans waking up to the possibilities of stablecoins?
Yeah, for sure. I mean, South Africa, there's a strong demand for cryptocurrency and stablecoins in particular. It's quite tough here for South Africa. Like you say, the rand devalues. It's really terrible, and it really puts a lot of pressure on South Africans. South Africans traveling abroad, it's very difficult. I mean, you go to the UK and you're paying 1,000 rand for some scrambled eggs. When in South Africa, you're paying like 100 rand, 200 rand. It's unaffordable for South Africans to travel, and it's obviously just getting worse and worse. We are lucky in the sense that a lot of our stuff here is produced locally. So we've got a very, very strong local production, strong agriculture, very strong beef industry. So a lot of stuff here is priced reasonably. We can afford it and isn't suffering so much from such extreme inflation as we would if we relied heavily on imports. But things that are imported are certainly getting incredibly expensive. Salmon, for example, is incredibly expensive. And obviously goods and services that are imported are going up significantly.
Like
travel has become
petrol
unaffordable for South Africans. Petrol, exactly,
yeah.
Absolutely.
And in your experience in Africa, are you finding a considerable uptake of people demanding these stable coins? And then once they do, if you're able to sell it to them, can they use those stable coins to purchase things abroad? You know, if they want to import something from China or they want to go on a holiday, can they use those stable coins abroad?
Yeah, so at the moment, not. So South Africans can purchase stable coins using their foreign allowance, so their million rand, and they can then get a tax clearance and extend that to 10 million rand. So through us, they're able to do that. They're able to do the foreign exchange and buy the stable coins that way, so using their allowance, and then they can do whatever they wish with it. There are suppliers in China that will accept stable coins, and it's increasing every day. And the adoption of stable coins as a means of payment is really, really starting to take off, especially in China and some areas of the Middle East. So that's very exciting for the use of crypto. But South Africans are able to do that. And then if they buy the stable coins that way, they can also buy things overseas with it. Many websites are starting to accept cryptocurrency, and that's all right. However, if South Africans are buying it locally with South African rands, their stable coins, they they need to check with their tax specialist or exchange control specialist, but they're not really meant to exchange that overseas. That should stay within South Africa's borders. But it's a very nice hedge against the rand, and that's easily accessible.
All right, we're going to come back to that and how this can be used as a hedge against rand depreciation. But just go through some of the use cases for stable coins for companies operating in Africa. Can they use these stable coins for trade? I think you've already discounted that. They can't. But can they use it for holding reserves? And
outside of South Africa, they definitely can, and they are. So stable coins are getting heavily adopted in Africa as a means of cross-border payments. So South Africa has got probably the strictest exchange controls in Africa. Many African countries have no exchange controls or very lenient exchange controls. Those countries, stable coins are an order of magnitude better than a traditional bank wire. For example, you're an importer in Senegal, importing, let's say, clothing from China. You want to go make a payment through the bank to your supplier. One, it's going to take you about 2 weeks to make the payment. Two, it's going to cost you 2 to 3%, which isn't cheap. Three, you're going to be asked multiple questions along the process. So as you make the payment, you're going to have to provide an extensive pack of information. And then along the process, every few days or so, you could get additional questions. And then lastly, and this is really the biggest problem, is any time within that period, that 2 week period, your payment could easily fail, get rejected by the corresponding bank, an intermediary bank, the final bank where it's going. The funds are returned and converted back to local currency at another 2 or 3%. So you could lose up to 6% and still not have your payment made. Doing it by a stable coin, it's instant. You go, you buy the stable coin. Within a matter of minutes, you have the stable coin. You transfer it to your supplier, and the transaction's finished with no risk of return of the funds, no risk of exchange rate fluctuation, no risk of additional questions, and all of that. So it really is an order of magnitude better. This is going 3 weeks where you could lose 6%, or 2 weeks where you could lose 6%, to instantly where there's no risk of losing anything. So this is the difference between essentially an email and traditional post. It's really that big of a difference. An international payment for an African, especially. Other parts of the world, they have a lot more efficient. Still not as good as a crypto payment, but far more efficient than Africa. But Africa especially, it's significantly better to make an international payment via stablecoin than via the traditional rails, which mostly is SWIFT these days.
No, you look at MicroStrategy. Michael Saylor is the CEO, was the CEO of MicroStrategy, which is listed on the New York Stock Exchange. He uses all his cash. He's one of the biggest evangelists for Bitcoin. All of his cash goes into Bitcoin because he believes that is going to be the money of the future. So if you want to buy a proxy for Bitcoin, you can invest in MicroStrategy. But are you finding companies in Africa doing a similar thing, holding their reserves, not necessarily in Bitcoin, but in stable coins to protect against this devaluation that we've been talking about?
Yeah, absolutely. So there is a lot of that. So companies holding their treasury in stable coins and sometimes even Bitcoin, although I personally wouldn't suggest holding your entire treasury in Bitcoin just because of the volatility. You don't know. I think over the long term, it's a safe bet. It's going to go up, but you don't know when you're going to need that money. So stable coins, absolutely, it's a fantastic way for companies to store their treasury. It's instantly liquid. It's liquid anywhere in the world. And the most important thing is it's very easy for companies in Africa to open a stablecoin wallet. It requires no KYC. It requires nothing. I mean, it's a matter of downloading the wallet and clicking open. All of a sudden, you have a US dollar bank account. Before that, African companies were completely in the dark, were unable to access dollar banking. Even today, we see most African cryptocurrency businesses struggling significantly to get dollar banking. And these are businesses that are very well capitalized and spending probably millions of dollars a year on maintaining dollar bank accounts and still struggling. Whereas if you're a mom and pop shop doing, say, $100,000 a year in total revenue, you don't have a chance to open a dollar bank account. It's just the facility is just not available to you as an African business person or a person doing business in Africa. Cryptocurrency and stablecoins has completely revolutionized that, where it takes 2 seconds, no questions asked, open the wallet, can't be blocked, can't be stopped. And more importantly, depends on what stablecoin you hold, but if you're holding, let's say, USDC, you have your treasury managed by BlackRock, one of the biggest asset managers in the world, which an African, again, a small business in Africa would never have access to traditionally. So it's really revolutionary in the sense that it's opening up opportunities for people in Africa to financial services that were completely out of reach before.
I mean, I guess that explains why of the top 20 cryptos by market cap, 3 of them are US dollar-backed stablecoins, and that's Tether, USDC, and DAI. Now, the initial use case for stablecoins was to allow crypto traders to park their profits after a big run-up in Bitcoin, for example. They could switch out of that into a US dollar stablecoin. The question then arises, are these really stable, these stablecoins, in the sense that are they backed by US dollars in the way that they claim?
Yeah, so I do think they are. I mean, they're all very different. Each stable coin of those top 3 you mentioned has had a point in time where they've depegged. Tether has depegged quite a few times, dropping, I don't know, as high as, I think it's about 10% from peg at one point. DAI, same thing happened at some point. And USDC recently, last year, when Silicon Valley Bank went bust, who held about $4 billion of their reserves, depegged also quite heavily. So each of these stablecoins have depegged in the past. USDC is very transparent. You can see exactly where their assets are held. They're managed by, like I said, BlackRock, one of the biggest asset managers in the world. I mean, a multi-trillion-dollar asset manager, really, really large. Additionally, the cash reserves are held at all very large banks, although we've seen very large banks can, in fact, fail and do fail, but are often backstopped by, especially US banks, or backstopped by the Federal Reserve, like we saw with Silicon Valley Bank. So I would say USDC is probably the most safe, very transparent as to what they're doing with the money. These markets are also very, very lucrative for stable coins. I mean, with 5-6% interest rates, these companies are printing money. Tether, for example, Tether has about $100 billion market cap. Tether made more money last quarter than Goldman Sachs. So that's another reason to believe that they are probably quite safe and sound. They're throwing off massive amounts of profit. Tether made more money than Goldman Sachs with 50 employees. So you can just imagine the amount of profit that they're making. They're not as transparent. You don't really know where the funds are held, but they are now audited by not a top 5 firm, but by some reputable accounting firm. DAI, on the other hand, is all decentralized, on-chain, backed by, it depends, there's different types of collateral. A lot of it's backed by USDC. Also, I would say probably quite safe, but the safest would be USDC for sure.
Right. And when you say they depegged, that means that they lost their pegging 1-to-1 with the dollar. They temporarily went down, but they did regain that peg fairly quickly.
Yeah, exactly.
Yeah.
So all of them have regained fairly quickly. We at OVAX, we have a market maker as part of one of our group companies, and we traded those ARBs significantly, meaning we were buying the stable coins, all 3 of them, each time they depegged. We're buying significant amounts. So this is all done just on our own balance sheet. But we're buying significant amounts of those stable coins from the open market at a discount and redeeming them with the issuer. We have very good relationships with actually all 3. DAI obviously is a bit different. That's all done on chain, but we do know the people there. But Tether and USDC, we work very closely with them.
All right, tell us what's going on at OVEX over the last year. You're spending quite a bit of time overseas. There's new licenses happening. There's new offices opening. What's happening?
Yeah, so it's been a very exciting time at OVEX. So probably about 2 years ago, I think we reached what I think was at the time kind of a plateau in South Africa. Pretty much South Africa reached critical mass. We're doing, at the time, it was close to $600 million a month of volume in South Africa alone, which was significant volume. It didn't see the market growing too much, although I do think now with regulation coming, South African market's going to go through a massive growth. We're going to see all the big institutions getting on board. We're going to see the banks. We're going to see large asset managers, and it's a very exciting time in South Africa now. But 2 years ago, it was pretty much saturated, and we were pretty much as big as I thought we were going to get, doing about $600 million a month in South Africa. So we grew out, started expanding across Africa. And like I said, in Africa, we saw a lot of demand for cross-border payments in crypto simply because it just makes so much sense. It's literally the difference between sending an email and sending a postcard. The one's instant, free, guaranteed, and so on. The other one's slow, can easily fail, expensive, no good. It's literally that big of a step. So we saw massive demand for that in Africa, and we started pursuing that quite aggressively. We obtained licenses in many different markets, about to get one in Botswana. We got a license in the UK, France, Australia, Nigeria. We're busy applying now that the licenses come out. South Africa, we've got multiple licenses. Right about now, the crypto license is coming out, which is super exciting. And and so on. Yes, I mentioned France for the Francophone African markets.
And what about the Middle East?
Yes. Middle East, sorry, of course, Dubai. We've been set up there for quite a long time. We were one of the first companies to get the license in the DMCC, and now they've launched the Virtual Asset Regulatory Authority, where we have a license as well. So that's also a very exciting market, and there's a lot of flow between Africa and the Middle East, a lot of flow between Africa and Europe, a lot of flow between Africa and the UK, and that's why we licensed in Dubai, the UK, and France to facilitate the movement of money between Africa and these markets. And what we saw, so like I said, we saw a lot of use of crypto for cross-border payments rails. So this year we're going to be launching a fintech product, which is a cryptocurrency, not a cryptocurrency, sorry, it's a cross-border payments company, purely traditional fiat-to-fiat, say Naira to pound, Euro to, I don't know, Central African franc, that type of transaction. On the back end, leveraging crypto liquidity and giving you that same crypto experience where it's instant, it's essentially free, no chance of failure, and so on. We're able to offer that through a traditional user experience for users, and that we're going to be launching its own company, separate brand in the next few months.
Now, final question. Bitcoin halving is coming up in a few months, and this has historically been associated with a rise in the Bitcoin price. Are you seeing people getting into Bitcoin in anticipation of this on the OVX exchange?
Yeah, we have. I mean, there's been a lot of exciting news in crypto over the last few months. Obviously, we just got the ETF, which the crypto community has been waiting for years for. It's a big ETF. That's a big nod of approval from the SEC in the United States. Huge milestone for crypto. So that alone has been causing a lot of attention. The next thing to happen is the halving. Always in the last 4 or 5 halvings, you've seen a massive increase in Bitcoin. Essentially, the miner rewards halve, and essentially the miners have to sell pretty much 90% of these rewards that they get for mining crypto in order to fund their operations. So that's a massive reduction in sell pressure that we're going to see. So that's very, very exciting. There's a lot of also macro trends occurring in the world that I think also could be wind in the sails of crypto and Bitcoin, which it looks like stable. Like the interest rates are starting to stabilize. Potentially, we might get some rate cuts at the end of the year or early next year. All of these things are very, very bullish for crypto. Essentially a risk asset. And yeah, I think we could be looking at the start of another bull cycle in crypto.
John Ovadia, CEO of OVX. Thanks very much for joining us, John.
Thank you, Kieran.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.